Hello everybody and a very warm welcome to another one of our Back to Basics videos here at The Working Trader. I thought today we'd take a look at what indices are. What is an index? So it's a method of tracking a group of assets, and there are many types of indices. They can be very broad, like a whole market index of a country. So like the S&P 500 measures the 500 largest companies in the US. The FTSE 100 is the same thing for the largest 100 companies in the UK. Or they can be really specific. It can be sort of a cannabis index or an oil companies index, media companies index. And what they're intended to do is to replicate that segment of the market or the market in general. And so an important thing to note if you're trading indices, if you're sort of doing it directly, like buying stocks or bonds, is normally you'd be buying into an index fund, exchange traded fund or mutual fund. Or if you're doing it with derivatives like CFDs or futures, that's what you're trading. The index is more just the measurement of the market or the part of the market. So risks and rewards of trading indices or sort of trading the instruments that are based around the indices. Um, I guess a risk and reward, depending on how you look at it, is that by definition you're not trying to beat the market, you're trying to match the market. So I guess if you bought a really specific indice, because you thought cannabis companies were going to do better than the wider market, you could beat the wider market, but what you couldn't do is beat the cannabis index because you are trading the cannabis index, so you can only do as good as it. Um, the indice, the sort of derivative of the indice or the ETF that you're trading with may well carry stocks or bonds or bits of the market you don't like. So if you don't like that, then maybe you don't think it's the best idea to trade the whole indice. A lot of people have, they don't like trading the indices and they don't like sort of broad ETFs. They don't think it's representative of what a lot of companies are actually doing. Um, by the way, we'll have more in-depth videos on, ETFs and derivatives and CFDs and futures and everything like that. I won't explain it fully here because this is just sort of a more of an explanation of indices, but we will look into that. And then they're naturally diversified. So if you're trading on the whole S&P index or FTSE, you naturally have all of those companies as opposed to just one company where individual risks to the company could really affect the price or not. But yeah, that's the risks and rewards of trading with indices. So what are some examples? Well, as I mentioned, we have Standard and Poor's 500, known as the S&P 500, and that is kind of the broad US stock market, or at least the 500 largest companies in the US. And that's probably the most famous indice in the world, I think, nowadays anyway. And you also got the Financial Times Stock Exchange 100, so that's the full name of the FTSE 100. So when you hear people talking about the FTSE 100, it's the 100 largest companies in the UK, broad UK stock market, and that's generally what they're talking about. You can also have specific indices, as I mentioned before. So you can have the FTSE 350 media, or you can have the Cannabis Index, and is a sort of, as I mentioned before, designed to replicate those areas of the market as opposed to the whole market, but they will still involve and include many companies within them. So again, if you went for the FTSE 350 media and you were trading that, you wouldn't be able to kind of out trade it as opposed to if you were trading with an individual media stock that you thought might outperform the market. So that's just something to consider about indices. Hope you enjoyed the video. Hope that cleared up what indices are. Let us know what you think in the comments below. And of course, like and subscribe if you enjoyed it. Thank you very much. Have a nice day. Bye now.